Joining us on the program now from Christian Savings, Andy Milne. Kia ora, good morning. Thanks for your time today.
Kia ora, Andrew. Great to be with you.
This does seem a little bit counterintuitive because the other thing we're seeing in the news, of course, is that interest rates are going down. You'd think this would be good news for mortgage holders. Well, I mean, it is sort of, but why such a high level of defaults, Andy?
Well, that's right. I mean, it does. You're right. It does seem counterintuitive. Why is this happening? So, just to put that in context, Centrix, the country's major credit reporting agency, they manage these stats, quite closely month on month. This is a 9% lift in this time last year, I believe.
Wow.
So while we've talked, regularly about the fact that interest rates are dropping, it hasn't yet translated into more peace of mind for borrowers. As you say, 24,000 households currently behind in payments, 1 in 10 personal loans behind in payments as well. So, and I think it's important to realise, well, why are interest rates dropping? If we look at the context, the reason that the Reserve Bank is dropping interest rates is because the economy is still in a pretty tough spot.
Yep.
And that's not, the economy is not some abstract concept that happens to other people. The economy is what happens to you and me.
Yep.
The choices that we make or are forced to make with our money. And for a lot of New Zealanders, we're still doing it pretty tough. Unemployment's running at over 5%, and cost of living, while the rate of inflation has decreased, prices are still high. So you put petrol in your car, you pay your power bill, you pay your grocery bill. Those costs are still up there. So and the other thing too is that while interest rates for new borrowers or borrowers refixing are coming down, people are still, there is still quite a lag in those fixed rates. So there are, many households that won't see the benefit of those lower rates for, some months, if not years yet, and are still paying interest at, maybe 7-8% in some cases, not the 4s and 5s that are currently being advertised.
And so, I mean, all the prices are continuing to go up. They're certainly not going down in my local supermarket. I was there yesterday. I just about needed a mortgage to get the groceries. All of the prices are going up. The wages not so much, which I suppose is good for inflation generally if you're lucky enough to have a wage. And also, if you're lucky enough to have your mortgage roll over recently, that's fine. But if it's still got 18 months to run, that's a bit of a long haul, isn't it?
Well, that's right. It's still, the headlines that say, interest rates are coming down, they're only good news when you're refixing. They don't obviously happen straight away. So what I'd say, if there are borrowers listening that are finding it tough to manage their payments, there are things that you can do. And the first thing I would suggest is approach your lender and be honest with them. Talk to them about what options they can offer. Let them know that you're struggling to make the payments. Don't put your head in the sand. Don't run away from it, and don't try and hide from it. Because believe it or not, your lender does want to help. They want to make it easier for you. And there are a number of options that you can explore. For example, you might be able to put your loan on interest-only terms for a short period of time until your financial situation improves. And in extreme circumstances, where banks and lenders can look at what's called full principal deferral. It used to be called a mortgage holiday. It's not really a holiday, but effectively, you can suspend both principal and interest repayments for a short period. Now, the downside of that is it does mean that the interest is added onto your loan, and your debt does go up. But in the very short term, for extreme cases, that can be an option.
Especially if you've got a fixed term coming up. Something else that I noticed is actually the floating terms are much lower than some of the fixed terms that have been locked down in the past. Would it be an option to talk to your bank and say, hey, I mean, there may be penalties for this, but can I come off a fixed and perhaps go on floating for a period?
Yeah. I guess that's a conversation to have with your lender.
Hmm.
And different lenders have different policies around those kind of things. So
Okay.
so definitely a conversation that could occur. The other thing I'd suggest is taking advice on your household budget. Now there are a number of Christian organisations, charities, and churches that offer budget advisory services, and they might be able to provide advice as to how to rearrange your household budget, manage costs better, find cheaper options for various things. So
Yep.
that's definitely something. So jumping online, googling budget advisory services in your local region, definitely something to look at too. The other thing, for particularly for borrowers with personal loan debt, they might have high purchases, car payments, etc. Looking at a good friend of Christian Savings is Money Sweet Spot.
Hmm.
They aim to get people out of the high interest consumer loan debt trap. So Google them and see if what they offer might be right for you as well.
Something which I only found out recently, in fact, Christian Savings also involved with individual mortgages. Some people may think, oh, you guys just do churches and public housing and those sorts of things. But particularly for those that are involved in ministry work, you can provide individual mortgages. What's the details there?
Well, that's right, Andrew. Typically, our bread and butter has been lending to the church and charity sector. But one thing we've been acutely aware of over recent years is that workers in ministry, workers in churches and charities, have been locked out of home ownership in many circumstances, thanks to the high cost of houses, high interest rates, rents making it hard to save deposits, etc., etc. And it's something that we've been very, very passionate about addressing through our ministry home loans and progressive home ownership schemes that we work in with partnership with churches and other lenders.
It'd be fair to say that those that work in ministry aren't necessarily on the average corporate rate as well. And perhaps
staggering to learn that some people don't go into church ministry with the aim of getting rich. I know.
Treasures in heaven, Andy. That's the way to go. And honestly, at Christian Savings, you see it in the broader perspective. They might not be as eligible for a mortgage through the regular banks, but you guys are happy to consider all of that, and people that wouldn't get a mortgage somewhere else might get one through you guys.
Absolutely. If you work in ministry, we'd love to talk to you about how we could support you into a home of your own.
That is absolutely fantastic. Of course, Christian Savings is the place to go for more information, christiansavings.co.nz. And what was that other organisation that you mentioned, particularly for budgeting advice?
So, Money Sweet Spot. That's right. Personal borrowers.
Yeah.
But there's a number that work in the budgeting space that would be well worth checking out.
Well, appreciate the work that you do at Christian Savings, christiansavings.co.nz. So once again, Andy, thank you so much for being part of the program.
My pleasure. Thanks, Andrew.
Hey, thanks very much for joining us in the Rhema studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.